Imagine a world in which you have your private banker at your beck and call 24/7, who is non-judgmental, who is ready when you are, who has the breadth of information, which is more extensive than any financial advisor could have.
Humanly have.
Taxes, portfolio management, your life goals, your liquidity needs, your career aspirations, your financial aspirations, and gives you the high quality insights regardless of how much money you're investing, be it $5 or $500 million. That is the holy grail. That is why we created Arta, and this is the goal and the vision that we're trying to achieve here.
Chirag, welcome to Arta Live Long and Prosper. I've been wanting to have you on the podcast for a long time, but obviously we optimized for external guests. So finally we're getting to you.
We're looking forward to doing this, yes.
We're going to talk about you. We're
Sure.
going to talk about Arta. And given you're here, we're going to talk a lot about AI.
Sounds great.
So
Let's do this.
Chirag, let's start out with talking about your career. And we worked together for a very long time. So this is more for our audience. Can you talk a little bit about what led to your journey to finally co-founding Arta?
Yes, been a multi-year journey. I'll start from the very beginning. As a kid, I was always interested in hard sciences, physics, math. The other interest I also had was in finance. So I did my first trade when I was 14 years old. And you can imagine it was a hard lesson, didn't work out. And so that led to a whole bunch of questioning of like, what could I have done differently, and sort of more explorations along that path. And so in the interest of exploring, being at the intersection of mathematics and finance, that's what my academic career was. So effectively, like being at the intersection of the two, did many internships, lots of research work, and ultimately started my career out in the prop trading industry, where, again, one of the key curiosities I had is who's trading millions and millions of shares of all of these stocks? Why are they trading it? What drives them to do it? How are they doing it in a successful way? And was lucky enough to be at a place where I was able to learn from some of the best folks in the industry. Initially started off as a researcher, building fully autonomous trading strategies using reinforcement learning. This was back in 2009 when reinforcement learning was not the shiny AI that everyone was talking about. But in finance, it lent itself really well to solve some of the problems we were trying to solve. Fast forward a few years, got the opportunity to start my own effort at DRW, which is a prop fund where my career started. And one of the key bets that we took is we're going to go all in on machine learning. And by that, what I mean is we wanted to develop a fully black box trading strategy where all the evolution happened via training models and systematically observing the problem and sort of getting better. And so that bet, required us to spend almost a year building out that system. It's difficult to build fully autonomous systems, as you know. You've had a career in tech, so you know how hard it is. But effectively, we were able to pull that off, and within the first year when it went into production, we actually became one of the largest traders in the US markets, trading anywhere between, I would say, 3 to 30% of the entire US market with a fairly small team.
3 to 30%.
3 to 30%, yeah. And it's a very small team. It's not hundreds of people, but that was an amazing... Machines, yeah. And that was like a front row seat to how technology, machine learning, and being systematic about solving problems can be applied at scale, and how that can pan out.
So Chirag, maybe let me interrupt you a little bit there,
Sure.
because there are two things you covered there, which I think it'd be good for you to expand a little bit more, particularly for our audience who's not as familiar with this area of finance. Can you talk a little bit about what prop trading firms are, or quant firms? And then secondly, what does it mean to actually be trading with these algorithms? What does it look like? What does it feel like? Like, why is it relevant?
Yeah, there's a lot of enigma around these things, right? So typically prop trading funds, you can think of prop trading funds in a similar fashion as hedge funds, but just less constrained than hedge funds. So typically hedge funds will have clients. Prop trading funds don't have any clients. It's all proprietary capital, hence it's called the prop trading funds. And their primary objective is to run strategies in a profitable manner. And in doing so, they also add services to the market. For instance, one of the things that we did was market making. So effectively in market making, when you go buy a Google or Amazon or Facebook share, there's someone who's taking the other side of that trade. So effectively, that's the market maker. And so prop trading funds have market making desks that effectively offer this service to the market. Obviously, in return, they actually get compensated by the exchanges Also, if they're good at what they're doing, they will also profit during the process of trading. So there's no one set of strategy that a prop fund runs. It's a wide spectrum of strategies. They can be doing discretionary trading where traders are, reading newspapers, following a market, talking to people and making decisions, all the way to fully systematic quantitative strategies that are looking at tons and tons of data and trying to trade profitably.
Let's talk a little bit about these systematic automated systems, because a lot of that is what's led to the public markets products that we offer at Arta. Can you talk a little bit about some of these strategies? Like, most people have seen movies about high frequency trading and things like that. Is that what we're talking about, or is there a much broader category?
So at Arta, that's typically not what we're talking about. At Arta, what we're talking about is we're taking some of the key aspects of quantitative strategy. So what is a key aspect of a quantitative strategy? Is there's a phase of research where you try and discover which are the signals that are useful in building a strategy to achieve a specific objective. At typically a prop fund, the objective is high returns. Within wealth management space, you have not just high returns, but you sometimes have to manage risk. Oftentimes, folks that are investing for long term need to make sure they have enough liquidity if they hit on hard times and things like that. So the objective is much more multidimensional in wealth management space. But the same principles that apply to a typical quant fund can be applied and applied at scale in the wealth management space to hyper-personalize, to achieve the liquidity needs that the user might have over the next few years. Maybe they have a concentration risk, they're working in tech, and we need to offload some of that risk in case they lose their job, or they have their RSUs or GSUs, their vest coming, and that's a large part of their portfolio. So that's how we think about quant strategies at Arta.
You've also adapted it to tax loss harvesting and being able to do that in a highly personalized manner.
Yeah. Well, thanks for bringing that in. That's the key part, actually. One of the key advantages to how we built Arta is no two investors have the same exact portfolio. What that allows us to do is be much, much more effective at harvesting losses as they're happening in their portfolio, given that we're running an individual strategy for every investor at Arta. And specifically, our tax loss harvesting algorithms have continuously improved over the last 2 years. We started from a good baseline, which was, I would say, was parity with the industry. And since then, we've gone to daily rebalancing. We've gone to a lot of detailed research around how can we extract the most value while not losing optionality and not tracking the economic objective that our investors have for their portfolios.
Let's talk a little bit about AI. I mean, AI has obviously been a buzzword for the last few years because of generative AI.
Yep.
But arguably, Arta has been an AI company before generative AI became a thing.
Yeah.
Can you talk a little bit about AI broadly and how you've used AI in different parts of the value of?
To be honest, AI has been around for decades. A good example that most people maybe know or don't know is 90% of the checks that are cleared globally actually use some sort of a deep learning model. And this has been happening since the late 90s. So there's actually commercial applications of AI that have happened for a number of years. Now, that's an example of a supervised learning model that's been trained to look at handwriting and convert that into digits or so on and so forth. That's one category of models, which is supervised learning. Then the other category of models is unsupervised learning. And this is where also convex optimizers come in, where you might want to create insights from a data sets by clustering it. That's a classic unsupervised learning technique. And LLMs fall somewhere in the middle of those. Effectively, an LLM, what it's trying to do is, given some history of a conversation, it's trying to predict what is the next word. It's really a token, but let's just simplify it to a word that makes the most sense given all the history that it's been shown to it. Not that different from a supervised learning model where some input data set is being given to the model to ask and predict what's the most likely next output that makes sense.
So I guess out of the way we've typically thought about it is, there are certain models that are much better, certain techniques that are much better to numbers, and where you want very specific outcomes. Right. And certain things where language, where there's naturally some level of flair and difference and change, and using the right.
That's another great way to distinguish is traditional machine learning is much more precise in what it asks as an input and what provides as an output, whereas LLMs are much more accepting of unstructured, loosely formatted input, and also on the other side, create more loosely formatted outputs.
Yeah. So let's get a little bit into this now. When people hear AI in finance, they automatically jump to thinking about AI investing somehow, this mysterious thing, buying and selling stocks. How have you been using AI?
So at Arta, we're pretty clear. When it comes to investment recommendations, advice, or financial insights, we want to use models that are explainable from first principles. The reason for this is we feel that there's a high burden on us as a company when we're providing recommendations. So we want to be able to make
as a regulated company in two markets.
As a regulated company in two markets, now globally with the Singapore launch a couple of months ago. So we feel that we want to have the regulated parts of the business be driven by models that are explainable, that can be stress tests across different scenarios. So at Arta, we go through a rigorous testing process before any model that is providing investment advice or managing portfolios, even our tax loss harvesting models, go through a rigorous testing process where we adversarially provide inputs to the model to see what happens and make sure they're well behaved. In addition to this, we have guardrails to ensure that the model outputs are bounded in a meaningful way. And there's obviously humans in the loop that are monitoring all of these things happening live. And every now and then, if we see something that needs to be looked at more closely, we'll take the right corrective actions if needed. And LLMs, the way we think about LLMs is they're a way to summarize high quality information insights and present information to our members in a meaningful way that is meaningful to their wealth management journeys. A good example is the feature we launched a couple of months ago with our global launch, which is Portfolio Recap. And what it does, it takes in a whole bunch of high quality data. We have factor models that look at the risk, that can analyze the risk of a portfolio in a multi-dimensional way. We have factors that tell us how much is this portfolio exposed to the tech sector or the finance sector or macroeconomic changes in interest rates. Now, it would be overwhelming if we just presented this data to the user. So this is where an LLM can meaningfully take in a lot of data and create a concise summary that would be meaningful to them. And even there, we went a step further to say, well, there are users that actually are financially very tuned in. Maybe there's professional traders, and the way we want to communicate information to them maybe should be different than someone who's at the early parts of their financial journey. And so this is where another use case for LLMs is we create different tones for these reports where we dial the sophistication of how we communicate to the expertise and the sophistication of the user.
So what's the ultimate point of this journey of like all of this AI stuff that you're appealing?
It's a great question. Here's our vision of what AI can do. Imagine a world in which you have your private banker at your beck and call 24/7, who is non-judgmental, who is ready when you are, who has the breadth of information, which is more extensive than any financial advisor could have.
Humanly have.
Taxes, portfolio management, your life goals, your liquidity needs, your career aspirations, your financial aspirations, and gives you the high quality insights, regardless of how much money you're investing, be it $5 or $500 million. That is the holy grail. That is why we created Arta, and this is the goal and the vision that we're trying to achieve here.
That's what we're using AI for. That's a great answer. So how do you see AI transforming the relationship people have with money over the next 5, 10, 15 years?
It's a great question. One of the key insights I've had is if you aren't plugged into the right group of people who know how to manage their wealth, you're going to miss out a lot. Like personally, I've seen this, even just talking to you all, how are you managing your finances? There are things that you were doing that I wasn't aware of that were quite powerful for me to learn. And one of the things that LLMs allow us to, and AI in general allow us to do, is take domain experts and make them available at scale in some ways, right? Take the insights of a domain expert and make it available at scale. And so one of the hope is that you no longer have to leave yourself to chance, that you hope to find the right people that know how to manage wealth. What we're creating at Arta is a series of co-pilots that effectively replicate an expertise of a domain expert, be it in wealth management, be it in tax planning, financial advisory, all of these, right? Then we can keep going on and on. And ongoing education, right? Portfolio recap and features like this allow you to understand when should you be patient and not react to drawdowns in the market versus, when should you dial up or down risk. Effectively, what we're doing at Arta is building these co-pilots that are taking domain expertise and making them available at scale.
And ultimately also helping people get started with all this way earlier in their careers.
Exactly. Exactly, and the cost basis for all of this is going lower and lower, right? If you can replicate what a domain expert can do at a scale where millions of people can be accessing that expertise, obviously the cost per user is lower, and hence we can actually make it available at scale.
Yep. So let's zoom out a little bit from AI into overall wealth management, private banking, and stuff like that. Obviously, it's a very large space that has been around for hundreds of years. How do you see that evolving over the next 5-10 years?
I think it's actually very hard to predict at those timescales, but I think the natural progression I see here, at least for the next few years, is a combination of AI and experts. That's what we've seen at Arta. What effectively the way we've been developing our AI roadmap is looking at what do our domain experts do when they meet our members, what are the typical problems that they encounter, and then we ask the question, how can we augment their expertise with AI? We started off by automating some of the mundane things they're doing, right? Collecting data sets, summarizing them, bringing insights so that they don't have to do the grunge work. But what we're seeing that extend to is now we're at a point where we're starting to get into insight generation. And I think this is going to go on for a few years. I don't think there's a clear stopping point here. But over the next few years, what we see is the power of the combination of the two is quite promising.
Okay, Chirag, let's take a step back from how do you see AI impacting everything you do and evolving how you use finances over the next many years?
Yeah, I think in one word, it's democratizing financial insights at scale. That's what this technology enables. If you're one of the lucky few people who have a great financial advisor, that's great. But for the rest of us who may be looking for that in planning our financial lives, this technology will enable us to get much closer to it. And for financial advisors, this technology allows them to scale much more effectively. So instead of serving 10 or 20 or 50 clients, maybe you can serve 500 to 1,000, right? Because it's freeing up more of your time to do what only you can do.
So Chirag, applying machine learning in finance has some very unique challenges. You have sparse data sets, you have adversarial markets. How have you worked to overcome these? Maybe first even explain what these problems are, and then talk a little bit about how you've designed to overcome these problems.
Yeah, one way to describe all of these is actually contrast how machine learning has been looked at in big tech and how it's been looked at in the world of finance. So in big tech, typically you have tons and tons of data. If you think about recommender systems, ecosystems like YouTube,
millions
Meta,
of cat videos.
Exactly. Yes. So you have millions and millions of these videos and a ton of interactive data that you collect from the users. Where are they focusing? How often are they looking at these things, the duration, so on and so forth. And so naturally, when you have that much data, you can use models that can handle so much data. And other issues that you typically run into in machine learning are biased data sets. Those are reduced because of the fact that there's just such a breadth of data. In finance, effectively, there's not a lot of high quality data sets. And the data sets you do have, let's start talking about the price data. There's true 50 trading days in a year. And so if you're just looking at end of day prices, there's 250 data points per year per security. And there are multiple things wrong with that data set. From a purely technical standpoint, each of the data sets, data point that you're looking at is correlated to the previous few data points. This is called autocorrelation. And if you're looking at pairs of securities, let's say Apple and Google, again, when you look at the stock price history of Apple, you can actually predict quite a bit of what happened to Google. So this is called multicollinearity. There's correlation between data sets that you're introducing to the model. And there's a few more. And given that this data set is so sparse, it's very easy to overfit a model to make it look like it's doing well in a backtest. So that's actually one of the key challenges that we're deeply aware of. And we have a lot of processes and systems in place that avoid overfitting. So overfitting is one of the classic issues that you run into in finance. And so this is how it's different from typical machine learning that's done at big tech. And so the question is like, how do you extract the most value? This data set is not perfect, but then how do you make the most of what's there? And that's where domain expertise comes in, is what are the questions you want to ask from the data set? How do you want to formulate the problem? So oftentimes machine learning models are thought of as end-to-end solutions. They're hardly ever end-to-end solutions. The way I think about them is they're generalized function learning tools, which you can plug at different places, but a research team still has to come up with asking the right questions from the model. So in the instance of building portfolios from these data sets, it's very critical. How do you formulate that problem? One way to do it is, let's just start predicting prices and load up capital on securities that have positive price predictions. But again, oftentimes these types of models suffer from overfitting. At Arta, we look at well beyond price prediction. We look at what is the composition of a set of securities? What is the Sharpe, the Sortino? How do they do as a group, rather than trying to predict individual security prices and constructing portfolios that way?
Absolutely. So Chirag, let's change perspectives onto a little bit about you and your Arta experience. So how has the whole entrepreneurship journey been? How has it been to be a co-founder?
It's been very interesting, and I wouldn't trade it for the world. My career, if you look at the history of my career, the first few years were spent in trading. It's actually quite a bit entrepreneurial. The way most trading desks work is you either have a successful strategy and you continue on doing what you're doing.
You eat what you kill.
Exactly.
I know I'm saying that to a vegetarian, but
yeah. Or you get fired and move on, right? It's a very, very results-driven business. So I did have a taste of entrepreneurship. When I went through Google, and this is where we started working together, it was very interesting to be able to step back and think about a domain at 5 or 10 year time scale. I feel like I would not have been able to do that in the trading industry. And what made Arta a no-brainer for me, it's a combination of the two things I love. What I got at DRW, which is being able to use technology at scale, and at Google, which is having that 5 or 10 year vision to transform a space in a meaningful way. And the other reason, to be honest, is the team that we had started together with. I don't think there's a team out there that can build the product that we built. Obviously, I'm biased, but yeah, it was a no-brainer, and I wouldn't trade it for the world. Yeah.
What's been your biggest learning out of all this?
The biggest learning has been, especially in the early parts of the journey of our company, every 3 months, I almost have to assume a different role to give the company what it needs to succeed. So if I look at every 3 months, what transformations I've had to have, it's like clockwork. Every 3 months, team size is growing. You need to do things differently. Needs a lot more coordination. We're driving towards a launch. Again, a different operating model is needed. Listening to our members and adapting to their feedback. So I think the key thing is adaptability and knowing what's the best way to help build a product that's actually useful in the end to our members.
And what are you most proud of in this journey of having built Arta?
I think I'm proud of the product that we built together. I don't think any one of us could have built the product we built alone. And there's something to be said about that. The journey, walking the journey together and getting to where we are today. I would say that's probably the thing I'm most proud of.
Okay, let's turn to some very personal questions to close off.
Yeah.
I'm going to ask you these in fill in the blanks.
Okay.
And so you can think about it and give me a one-word answer. If you want to prosper, never underestimate the power of dash.
Time.
3 key ingredients for a long, fulfilling life are dash, dash, and dash.
I would say family, health, and wealth.
Family, health, and wealth. The simple joy that adds years to my life is
tennis.
I knew you were going to say that. Okay, I think thank you so much, Chirag, for being on Arta Live Long and Prosper. It was wonderful having this conversation in this format.
Yeah, it was great. Thank you.